Hi, hello everybody, and welcome to the conference call at DKT, TDC Holding and TDC NET, held on occasion on the Q4 results released earlier this week. My name is Henrik Jorsø Nielsen, and I'm heading the Treasury and Investor Relations. Thank you for joining the conference call. I have with me the CEO of TDC NET, Andreas Pfister. So first, we kindly ask you to mute your microphones during the presentation. If you want to ask questions during the Q&A, please write your name and organization in the chat and we'll return to you. An alternative is to send an email to investorrelations@tdc.dk. We'll have the Q&A after the presentation. Present the latest of TDC's separation journey, including the highlights and headlines of the quarter for the DKT and TDC Holding Group. Subsequently, I'll give a word over to Andreas, who will take you through the performance of TDC NET. We'll plan a conference call for Nuuday later in Q1 on the Q4 results. So let's go to page 3 that marks some highlights in TDC Group's separation journey. End of 2021 marked a key milestone as the separation of TDC Group was finalized. New separate board of directors were appointed to both TDC NET and Nuuday in December to operate the two newly separated companies. As TDC AS has become a pure holding company, the name was changed to TDC Holding. All employee has been reallocated from TDC Holding to the operating companies. And to support the journey, separate funding has been established for TDC NET and Nuuday and will be developed more in 2022. For TDC NET, the company entered into a new secured infrastructure financing platform. The platform is developed with inspiration from UK infrastructure companies. The setup is supported by a strong Danish legal creditor protection, which originally was developed for the massive Danish AAA-rated mortgage bond market. We did raise long-term committed bank loans, revolving credit and liquidity facilities in the aggregate amount of 3.3 billion euros on the 31st of January. Subsequently, TDC NET has borrowed funds under the term facilities to prepay all outstanding senior secured debt in TDC Holding, including its 1.9 billion euro term loan, the term loan B, and amounts drawn under its 845 million euro revolving credit facilities. The security behind the term loans at TDC Holding has been released and is now security for the new funding facility. NET is contemplating to diversify this funding through issuance of bonds, private placement, and term loans. The EMTN bonds at TDC Holding will remain until maturity, where the first is up in 2 weeks and the other bond matures in a year as they are non-callable. The EMTN bonds are supported by a Danish statutory demerger liability with claims on both TDC NET and Nuuday. The newly engaged bank facility secures that there is sufficient funding to pay on the EMTN bonds at maturity. For compliance reasons, I cannot comment on plans for the outstanding high-yield notes at DKT Finance. For Nuuday, the company entered into a revolving credit facility on the 31st of January to support its liquidity management as a standalone company of 200 million euros. Further plans for future funding of Nuuday will be released later. Following the independent financing for TDC NET and Nuuday and the prepayment of the debt at TDC Holding, formal reporting requirements have changed. However, it remains our ambition to give investors a good coverage of DKT and TDC and answer questions, which is also why we're having a conference call today. But the format will be a bit different as we pursue independent funding of TDC NET and Nuuday. In connection with future earnings releases, there will be more focus on reporting on TDC NET and Nuuday as independently financed company. This time we're separating the conference calls between TDC NET and Nuuday. Turn to page 4, where I'll present the highlights from TDC Holding consolidated in Q4. Throughout 2021, we've seen continued improvements in our commercial and financial performance. On a consolidated basis, TDC Holding entered 2021 with a slight increase in EBITDA of 0.1% compared to 2020. This slight increase should be compared to our 2021 guided financial performance of a stable to slight decline in EBITDA. At Q4 2021 in isolation, we saw a stable development in revenue as reflected by a flat development of -0.1%. This development was driven by historically high growth in revenue from mobility services, where we saw positive net adds of 61,000. Gross profit decreased by 2.3% in Q4 due to a market pressure related to cost increases on content and mobility services. There are continuous efforts to optimize the business across TDC NET, Nuuday, and TDC Holding. In Q4, these efforts were reflected by a decrease in operating expenses of 5.7%, mainly driven by lower external expenses on e.g. IT services. In addition, our capital expenditure decreased by 17.2% in Q4, following the completion last year of the mobile network 5G swap. Page 5 that presents key figures on TDC Holding consolidated financials. On this slide, we have summarized key figures for TDC Holding, consolidated for Q4 as well as for 2020 and 2021. While I touched upon the Q4 performance on the previous slide, I want to emphasize on this slide how both revenue and EBITDA have been stabilized in 2021 as compared to the setback that we experienced in 2020. Page 6. We decomposed TDC Holding's consolidated performance into its two operating companies. The numbers on TDC Holding consolidated match those on the previous slide that reflected continuous improvement in the commercial and financial performance. As mentioned in the press release, Nuuday CEO John James will comment on the Q4 financials for Nuuday at a conference call later in Q1 as more information about Nuuday is released. But let me here repeat one of John's key messages that Nuuday has achieved commercial stabilization in 2021, primarily through significant growth in future-proof services such as mobility services and high-speed broadband. This is supported by an increase in the customer base. I'll add more details to TDC NET's development on the subsequent pages of the presentation today. The aggregate of Nuuday's and TDC NET's performance does not match this consolidated picture, which also corrects for eliminations and accounts for the remaining activities in headquarters in 2021. The TDC Holding consolidated pictures largely mirrors that of DKT Holdings. On page 7, we make a deep dive into the development in opex and capex. In Q4, we reported that operating expenses decreased by 5.7%. The improved operating expenses were fueled by continued focus on cost savings across the organization. And as a result, the whole organization has managed to reduce FTEs, external spend, and IT costs. Q4 capital expenditure was 1.3 billion DKK in total, a decrease of 17.2% compared with the same period last year. We continue to be committed to our fiber rollout strategy, which is also marked by a high consolidated capital expenditure in Q4. On page 8, we shift our focus to the group's capital structure. As of December 2021, the leverage of DKT Holding Group was maintained at 5.3x, while leverage at TDC marginally increased from 3.5x to 3.6x due to valuation. Again, it should be noted that TDC Holding has prepaid all outstanding senior secured debt, including its Term Loan B and amounts drawn under its revolving credit facilities. The leverage for the group has not been impacted by the refinancing of TDC NET. With these words on TDC Holding's consolidated financial performance, I will now give the word over to Andreas, CFO of TDC NET. Please, Andreas.
Thank you, Henrik, and good morning from me as well. I'm Andreas Pfister and I'm the CEO of TDC NET. I've been with TDC for the last 5 years and with TDC NET as the CEO since its start. I have a background of more than 25 years of telco experience across Europe, having worked for mobile integrated players as well as incumbent and challengers. I will, for the next minute, summarize the main highlights for TDC NET in Q4 and for the full year 2021 before going more into depth with the financials of the last quarter. In Q4, TDC NET realized an EBITDA growth of 2.4% year-on-year, and adding up the 4 quarters for the full year 2021, an EBITDA growth of 1.4%, which was in line with our 2021 guidance of small single-digit EBITDA growth. Our mobile network was once again a large focus area and a key strength for our business in 2021. The previous years' investments into upgrading and further evolving the mobile to deliver great customer experience truly paid off, as TDC NET was awarded the provider with the best mobile network experience in the world by crowdsourced benchmarking company Tutela. In Q4, we continued also the innovation and development of the mobile network by testing the 5G millimeter wave technology based on 26 GHz spectrum as the first network provider in Denmark, and managed to deliver speed record up to 4 gigabits per second over the air interface of our mobile network. In 2021, we also continued our fiber build out to future-proof our fixed network footprint in Denmark. Also in Q4, TDC NET increased the footprint by 38,000, reaching a total of 106,000 additional new addresses for the full year 2021, adding up now to a total of 500,000 fiber homes passed by the end of last year. Combined with TDC NET's strong foothold in coax, it puts the combined high-speed footprint of TDC NET towards 1.8 million addresses across Denmark, a strong starting point for further commercialization in the coming years. And finally, end of 2021 also marks a key milestone in the journey to establish TDC NET as an independent, strong, and standalone company. The monumental task of separating a 140-year-old integrated telco started back in 2018 with the new ownership of TDC Group by our current owners. The year after, 2019, followed the legal separation from TDC Group and into TDC NET and Nuuday with a large transformation program to functionally split the companies. And by end of 2021, a key milestone was achieved with the final transfer of the remaining group functions and people to both TDC NET and Nuuday. The transformation of TDC NET is far from finished, and we will continue over the coming years to further shape TDC NET as a market-leading company in mobile and broadband, and a company that delivers truly great customer experience to service provider and their end customers. As another key step of becoming an independent standalone business, TDC NET established its new secured infrastructure funding platform in late January 2022, entering into a 3.3 billion euro of new committed long-term bank facilities. With this financing platform in place, TDC NET is now able to finance, continue investing in our business for the years to come. Moving on to the financial highlights, let's turn to page number 11. I will now go through the financial highlights that are referring to the table on the following slide. Starting with the top line, TDC NET's revenue increased by 0.4% in Q4 year-on-year to 1.687 billion DKK. Gross profit was stable in Q4, with rising revenues from mobility services and high-speed broadband offsetting the decline in low-speed broadband. Looking at 2021 gross profit, it decreased by 1.4% compared to the previous year, 2020, and this was primarily due to the decline in revenues from TV and low-speed broadband, only being partly offset by the growth of high-speed broadband and mobility services. Gross cost side, operating expenses were reduced by 7.7% year-on-year in 2021, driven by cost savings across the full TDC Net business. The improvement was primarily driven by strong execution of initiatives through a company-wide efficiency program, resulting in lower spend on consultancy services, renegotiation of service agreements, as well as synergies captured in absorbing TDC Group support function as part of the separation activity. However, savings were partly offset by higher electricity prices in 2021, which TDC Net continues to mitigate with energy optimization and further legacy decommissioning programs. In Q4, TDC Net delivered an EBITDA growth of 2.4% year-on-year, driven by a flat gross profit development and savings and operating expenses. In 2021, EBITDA increased by 1.4% year-on-year, primarily driven by savings and operating expenses and offsetting the decline in gross profit. And finally, capital expenditure decreased by 10.6% in Q4 and 21.1% for the full year 2021. And this was primarily due to the high investment levels which we had in 2020 in the mobile, in particular, where we completed our upgraded nationwide 5G rollout.